What is private mortgage insurance, or PMI? What benefit does it serve to you? What is its purpose? And how can we get rid of it as quickly as possible? Stick around, coming right back to break down the details. Welcome to the Mortgages Help Here channel. This is Brandon Lewis with Integrity Home Mortgage, coming to you with some more great mortgage information, trying to take as much pain out of this process for you. So today we're going to talk about PMI, or private mortgage insurance, on conventional loan. I know, it's exciting. So what we're going to do is we're going to take a deep dive into PMI. What is it? What purpose does it serve? Is there a benefit to it? And how can you pay it? Are there different options? And then of course, we're also going to talk about what I consider the Ferrari of the mortgage industry. Exciting stuff there. Now, before we get into PMI and private mortgage insurance and start to break down the different options, the different scenarios, what is it? What is best for you? Let's go ahead and click that subscribe button for me, please. Hit that bell as well. Want to make sure you don't miss any great information coming forward. This video in itself is just going to be a brief overlook of PMI. I'm going to follow up with a 3-video series next week that will show you the breakdown of the 3 different types, or really 4 different types of ways to pay PMI and which way may be best for you. So again, click that subscribe button. Want to make sure you don't miss those great videos as we release those next week. Really excited about that. All right, so what is private mortgage insurance, or PMI? Private mortgage insurance is an insurance that homeowners are required to pay on conventional loans when they put less than 20% down. So this is an insurance that protects the investor of the loan, not you as the homeowner. You just get the pleasure of paying it, but it protects the investor of the mortgage if you were to default on the loan and go into foreclosure. This will help them recoup some of their losses. Without PMI, or private mortgage insurance, if it did not exist, we'd all be required to put 20% down on conventional mortgages. So, as much as we don't like it, it's a useful tool for us, and we will definitely work with it. All right, now, when it comes down to paying PMI, you actually have a few different options there, and a lot of lenders just skip over this altogether. The most common way to pay private mortgage insurance that we're familiar with is to have it built into your monthly payment, right? So it's added into your monthly payment, just like your real estate taxes and your homeowner's insurance, and you pay that monthly fee up until the point that you can prove that you have 20% equity in your property by proof of an appraisal, and then you can request to have the PMI removed. So that's nice. You're going to lose a certain portion of your payment, therefore it's going to drop. So a nice benefit to that. Now, when we break down these different types, we're going to get into the nitty-gritty of all the monthly PMI and removing that PMI. All right, the next option is, this is like a Band-Aid, rip it off, get it over, done with quickly. But this is single premium private mortgage insurance, and that's exactly what it sounds like. So instead of having it paid in a recurring monthly payment, you're gonna pay it as a one-time fee at the time of closing. So just like any type of insurance or premiums that we pay in an annual basis versus a monthly basis, you're going to see a nice savings there. Proceeding with the single premium PMI is nice because you know exactly what your PMI exposure is capped at. And again, it's a one-time fee that you can either pay at closing with your down payment and other closing costs, or if there's room in the loan, you might be able to finance that PMI single premium fee into the loan, which is pretty sweet as well. So again, when we do the 3-part video series on these PMI options and break down and deep dive into each option, we're going to go over the pros and cons of the single premium and how to calculate what's your break-even point. You know, what is going to be best for you, the monthly or the single premium? Should we go with financed? Or are we better off paying it at closing? You know, there's gonna be pros and cons to every scenario. We're gonna break those down to help you figure out which one's going to be best for you. All right, so that's it. Again, this is just a quick overview of PMI and giving you a heads up for the 3-part series that's going to be coming out next week. PMI, what is it? It's an insurance that we have to pay on all conventional loans when we put less than 20% down. Now, somebody that puts 5% down is gonna pay more PMI than somebody that puts 15% down. So it is risk-based pricing, which is nice, and we'll discuss more of that as we get into the individual series on the different PMI options. All right, so heads up on that 3-part series real quick, just to let you know what's gonna be coming your way next week. First video is gonna be on monthly PMI, as we just discussed. Having that PMI added into the monthly payment. Once you can prove 20% equity in the property, then you can request to have it. So monthly is generally the most common way that we're familiar with private mortgage insurance, or PMI. The second video coming out is going to be on the single premium PMI. So again, just like the Band-Aid, rip it off, get it over and done with, we're gonna talk about paying that PMI as a one-time fee at closing. And then we're also gonna discuss, can you roll it into the loan amount? So there's some pretty cool options with that one as well. Now the last one, this is what I consider the Ferrari here of the mortgage industry. It's not the sexiest industry, so we gotta take what we can get here. All right, this one's gonna sound a little crazy, so stick with me, but this is called lender paid PMI. But what this means is the lender's gonna technically make the PMI premium payment to the mortgage insurance company, and then the lender's gonna increase your interest rate by a certain portion, and that is going to be considered your PMI. Now, there are some substantial benefits to that option. Like I said, this is the sexiest option in PMI. Those are the 3-part videos coming up next week: monthly PMI, single PMI, lender paid PMI. Thank you as always for your support. I appreciate you visiting our channel. Again, make sure you click that subscribe button and click that bell as well. Want to make sure you don't miss any updates, especially on this 3-part series coming forward. And this will all be released over Monday to Friday next week. Any comments, concerns, questions, throw them down there in the comment section. Would love to answer any questions that you may have or address any concerns that you may have about PMI, or just provide some clarity about PMI. It can be confusing in itself. Thank you for visiting our Mortgage is Help Here channel. And this is Brandon Lewis with Integrity Home Mortgage, and I'll see you on the next mortgage tip.